Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Wednesday, July 8th, 2020. What a day. Pretty interesting. You know, there's so many cross currents going on in this market and not a lot of new economic data. Now, tomorrow you're going to get hit with the new jobless claim, so we certainly want to pay good attention to that, see if there's a trend, if they're spiking up or down. We're seeing many more cases of COVID found all over the United States. I keep running into young people that don't want to go back to work. They're saying that it's too dangerous, they're not going to do it, and blah, blah, blah. I find others that are tired of being at home and they're at work in different places, some of the restaurants that have opened in the city, and I talk to them about it. They go, they'd rather make less money and be working than at home. So you've got a mixture of everything you can imagine going on. When we take a look, you can see behind me green and red. So it wasn't a one-sided street, but it was pretty one-sided in the ETF of the stock indices. They were all to the upside. Gold, a new high move for this recent rally in the market. Not a high, but a nice move to the upside. Silver as well. TLT sort of stuck in the water here back and forth. So let's go to the charts and let them do the talking rather than me. And notice I have a haircut. It'll look much better tomorrow, but I did get scalped today. First haircut since March. Wow. All right. You can see how the market's been working higher on the tech sector. And we know the favorites of the market. The market's in love with anything high tech that people are using at home, abroad, for this new COVID-19. That's what the market's in love with. You can see how the pattern has gone here from a lower low to a higher high, but all it does is keep moving up. Now, we had an outside day down on yesterday, not today. Let me show it to you here. If you take out that day's high, if I can get my fingers right here, of 108.07, it's a bear trap. So the people that were looking for a top here get caught. And that would also, for the moment at least, give you higher lows and a higher high back into the uptrend. The market support for the market, if you don't take out 108.07, maybe you go back to the 18-day average of closes. Where are you fighting and stuck? Where do you think it is? You take a look at these black dashed lines. They're Bollinger Bands. And the way that I use them is when you get to them, it's like hitting a fence. Can you get through them? Of course you can get through them. But the initial reaction is a fence. And you got to bust through that resistance and prove you can keep pushing that resistance out. Not an easy task. Sometimes it has its roots in cement and you got to fight it. Momentum. Well, if we look at this, you have both numbers over 80 today on a close, both over 80 yesterday, but not the day before. You need 3 days in a row to convert from overbought to locking in what I call embedded reading, where both the red and the blue numbers are going sideways over 80 like they did here, and that's often, the word is not always, that's often accompanied by a market trying to jive and driving higher. Two elements to that statement. In SMH, same thing. We're trying to get an embedded reading. So both numbers today over 80, but as you'll see, barely over 80 yesterday and not the day before. So here too we need it. Again, its cousin, the semiconductor 25 index. And as you can see, you're fighting at the Bollinger Band. If I took the names off the chart, you'd go, whoa, they're pretty similar. In the industrial sector, we're in the middle of no man's land. You've got a lower low, higher high pattern stuck at the 18-day average. Now focus on these black lines. It's called the beginning of a pipe. This is a pipe. And when the Bollinger Bands just start going sideways on you, it's often, this one happened to be better than most, but it's often accompanied by you get a buy signal that doesn't work, you fall down, you don't follow through, you come up until you break out one way or the other. That's the typical pattern. I have learned to avoid trading in those. My experience has been disastrous in them. When I come to XLE, I'm still bearish. You've got, as you can see, an embedded reading. That rules the day. So as I've said, and I keep saying, I think the pros are selling at that 100-day average, and I think you'll see a good amount of short covering at the 35-30 level or the Bollinger Band, wherever it's at in the morning, if it can get there. What's holding back QQQ? You can see it. The market's locked in and just sitting on the upper Bollinger Band. A little bit over it, a little bit under it, back and forth action. That's bullish. Now the market doesn't have the embedded reading. So if we look, I'm going to tell you it does. Both numbers, again, both. So you got 3 days in a row over it. Tells me that on the pullbacks, the pros are a buyer until the red line closes under 80. When it closes under 80, I'll look for price in the 18-day average to make a run at each other. Until then, I like this market, and I talk about it in my afternoon spider ETF because I'm telling people where I think they should come in, and I won't tell you that. There's more moving averages on my charts in my afternoon spider and a couple of other things. That's a subscriber video, paid for, hard to believe. A lot of people on it. We have higher lows, higher highs. As you can see, you're fighting the upper Bollinger Band, but bullish, not bearish, overbought. I get it. Do I think the pros are going to buy into overbought? No. Is there a reason to be short? Absolutely not. But there's plenty of reasons to take some money off the table right there. GLD, again, the embedded reading, and as I said, if you get the pullbacks, and you've had them, past tense, to get in on this, and the market now today, a day where I think money's coming off the table again. You're up to the upper Bollinger Band, but I expect the same game plan where the market starts coming in on a friendly basis on this market. I might have, tomorrow I'll try to remember in this to put the 50-day average for you so you can see what the articles that are in Bloomberg when they talked about the death cross and the bullishness, where this is all taking place. That should help you maybe a little, if I can remember it. GDX, not even giving you a chance. The market's just married to that upper Bollinger Band. On pullbacks, I expect strong buying. I talked about the fact that if gold's going up in value, how can the miners not? Their assets under the ground as they bring it forth. First of all, if they get a better valuation on the gold in the ground, then they have to bring it forward and spend money. But this keeps them pretty much in good shape. TLT. I see just a fight and sideways action. I think we're going to form a pipe right here. I see whipsaw market. Interesting article also today in Bloomberg again that I just read. And as I was reading the article, it's about yield curve, and it's an opinion. And I agree with the person. He thinks they're going to really keep the yield curve controlling the front end of this market. I don't think the Fed's too worried about really long duration, like 30 years and so on. In FXE, you got up to the upper Bollinger Band. That's a spot where I think the pros took some money off the table today. The trend is up. It's been up. First hit of the upper Bollinger Band, boom, you're overbought. Doesn't mean you can't go higher. Let it embed or work off the overbought condition to see what happens. So you put it all together, you try to come up with a game plan, and that's what I work with you on our Guide to Technical Indicators. Now, this was put out by Modern Trader magazine, our good friends there. And we've converted it with them to PDFs. And in those PDFs, what takes place is you're able to take a look at all these primers on what's going on. These are not one sentence. They've all got examples, great charts to go through it, teaching you a lot of what's going on. I have looked at these primers left and right as new companies put them out, they get redone. This to me, you know, there's a gold standard. Gold standard. I'm going to say that's what I think. That's my impression of it. To get it, go to our website under free offers. That'll take care of everything. I'm Ira Epstein. You have a good day. I'll see you tomorrow.